Hello, everyone. Welcome back to the Rational Investors Recap, daily recap of our daily brief video. As you can see, we had a really vibrant conversation today. We actually had one of our site OGs who is really big on fundamental analysis and macro drivers for countries on the call today, Jamie, and he gave an excellent report on GDP and PMIs and economic forecast going forward. I suppose just to start off our conversation, and of course, Alex will remind me as soon as I hit the 2-minute mark that we need to move on to the next market with commentary. But just to sort of start off, and really, I don't think this should shock anybody. You can clearly see this is the US dollar index, and it's building towards a coil. We've been talking about coils and stuff recently on things like Bitcoin and stuff, so everybody should be familiar with the concept of the coil. But in essence, you can see we're building towards some sort of apex event, and what a surprise, that apex event is basically going to happen right near their Fed announcement of whether they decided they're going to cut short-term interest rates or they're going to continue on with the higher interest rate doctrine that we've seen recently. Nothing really to comment trade-wise here. I suppose you could look at this doji fail candle here as a fractal top. And we also have some gaps down below. So this is very sloppy chart, no doubt about it. And I think we have to just let this play out. Through the call as well, we took a really interesting look at Canada. Unfortunately, Canadian fundamentals are not good, simply because we're at the end of the Canadian expansion cycle. Canada is a commodity country, and that trend has changed. If we look in the short term, things look relatively optimistic, so that's good. Oil prices have been bid up. We were talking about potential divergences coming in here, and you can see that the move very strong, then weaker. Yes, we are making new highs, but weaker. So, and then if we zoom out on a bigger time frame, what's interesting about this is it almost looks like it's a trend line breakout, but unfortunately, actually, all we're doing is just coming right up to trend lines. So my hunch is we're probably going to see a world of resistance up in this area. That would be sort of like 75, 70, I guess 77, 78 ticks. AB equals CDs. Then we'll find out whether this commodity move has any legs. And of course, that's on that US dollar apex. If the Fed does cut rates, then we may see these international currencies do okay. If they continue on their strong high interest rate policy, it's going to put pressure on the Canadian Central Bank to keep rates up and moving forward. Just to sort of finish that thought, we also took a quick boo at the British pound, and unfortunately the British pound, we've got Brexit coming up here shortly, so it looks to me like capital is still, what have I done here? Capital is still flowing out of Europe. The econs are pretty poor, and we just don't have many W's working there on the British pound. So, definitely into that Brexit event, we probably should just cool our jets with regard to the British pound. We'll dovetail that with just a quick boo at the equity markets. Interesting, and as Alex and I were preparing for this actually jumped out at me. You can see Willie isn't quite quote-unquote stupid here yet. We're at 64 on the Williams percentage R, but I do see potential bear, actually not potential, this is actually confirmed now. Actually maybe it isn't. Maybe it's still in the potential camp. That low there was 4.33, 4.41. Okay, so if we finish today, we'll actually confirm that bearish divergence on MACD. And of course, Thomas the Bear, he likes to have the MACD below zero line. Me personally, I'd be more than happy to call that a div if we print there below 4.33. So watch your MACDs closely here. And also notice too that I used my Brian special 930 MACD settings. So a little bit different than, just out of the box. But we can actually see that sort of momentum divergence if we actually look at the price action. We sort of talked about this a moment ago with the US dollar index. Big push up. Actually, I think it was Canadian dollar, but push up, yes, but smaller. Push up, yes. New highs, yes, but smaller. Push up to new highs, yes, smaller. So you can literally see the momentum rolling over here. And that's sort of what I like to talk about with MACD. It's an excellent illustration of that sort of oomph and how the oomph is kind of running out of steam. And also notice too, we're above value. So that's got to be a bit of a warning sign. And Colleen, of course, loves those kind of setups. If we take a quick boo, sort of dovetailing with our British pound kind of thought, it is interesting to see that the MACD, this is the FTSE, the UK 100. I know Jamie would prefer us looking at the 250. It gives a better measure of the domestic market within the UK. So maybe I'll try and have that up in future broadcasts. But I have on here the FTSE 100. And you can see in this particular case, the bearish divergence is confirmed. And it's also confirmed with a move below the zero line. So little bit of a dangerous situation. You can see how this bull divergence led to this rally here. Now this bear divergence, you can see price is wavering here a bit. I don't know what the fundamental drivers are in the UK, but I would encourage everybody to just take a bit of a pause when it comes to investing in UK, simply because, you can see trade location wise. We're definitely at an area where if the market did want to break down, it's got the green light. This is basically where it should break down. You can also see that we're against the original market structure top. And like we said just a moment ago, we actually had Willie go stupid here. That's not good. And we have a confirmed bearish divergence on MACD. And this may also lead to a double divergence here. You can see this bigger one. So if this thing poops the bed, then it probably means that the bull rally is done for UK stocks in the short term. And if I understand correctly, that big sort of Brexit event is supposed to happen sometime this fall. So again, get ready for some fireworks this fall, people. I think it's going to be a pretty bumpy ride. Moving on, on the Saturday class for the level 3ers, we covered option strategies. I happen to have bought a bunch of call options on this overstock when it W'd down here. This is a great trade. I don't want to beat the dead horse here. I'm not going to talk about how wonderful the trade was. Way to go. But this is a really good analogy here. Of course, Bitcoin, crypto came off dramatically. So you can actually see the reaction in the stock market to that sort of, keep in mind stocks were closed through the weekend. So in essence, overstock as a crypto proxy in the stock market had to play a bit of catch up here. My hunch is that this stock will actually go into quote unquote fail mode. If we fractal out here, you can see the noticeable fractal top that's trying to form. But just an FYI to the audience, I sold my remaining position here on overstock, probably more on the fact that I had been painting a bullish flagpole on the stock for quite a while. And that flagpole target was hit, if I can find the darn symbol. You're probably looking at the screen. You've seen it go by a couple times. There it is. So there's the bull flag. We rallied up. We hit this trend line resistance. And what was really interesting about this was I sold my calls when the market was really frothy up here. And even on Friday's up day, the option price was lower than where I sold it at. So with this fractal here and a big down day, down 7% on the day, those option premiums just evaporate. So we have to be a little careful when we're playing the calls and the puts because remember, options are derivatives. They derive their value off something else. But interesting, look at that cute little M there on RSI. Julian following his RSI model, I wouldn't be surprised on something like RSI if we actually have to pull back to the trend line here, which you can see. Yeah, he's got a bit of room to come back here. So long and short of it here, I hopped off the last of my position, just walk away and just count my money. Hey, I actually got a winner, so that's good. So. All right, so continuing our sort of conversation about crypto and crypto related names, not a bad idea, just take a quick boo at the corn. I've said this repeatedly of late, and I still think this is the case. First and foremost, Litecoin was leading this rally on its fundamental event. It topped out and it broke down. We'll take a look at that Litecoin chart in earnest. But really, when we look at the Bitcoin chart, really, I think really the story here is narrow sideways channel. Mountain Man, of course, stopped the bull run to the upside, painted just a monstrous wick, shooting star. On balance, shooting stars, wicks, they like to be eaten. And I think that's exactly what this last rally is that we saw. After the shooting star and sort of the panic dump, notice that they dumped the market right into 38.2s. Big fat round number, $10,000. Not a surprise that we saw some buyers come in off of those levels. And probably more importantly, people that were short off the top simply covered their trade at the 38.2. Harmonic people, that's like religion. You have to take profits at 38.2, at least partially. So, over the past really, I guess you could say the past couple weeks, I've just been simply saying that I think Bitcoin's in a trading range. And if anything, this is an excellent analogy that, we can't really decide what this market's going to do until we resolve 38.2. We might M out here and then dump through 38.2, which means the bull's done. You can see moving average support down below. You can see reload zones, and you can see where value is. So that if we do lose 38.2, we do lose this trading range. Not a big surprise if we have to dump. Conversely, if this is still a bull, then we don't M out here. We actually W out here, and we can start going and hunting bullish bots. So for now, we're just sort of in wait and see mode off of the higher time frames. And really, as we sort of said, long and short of it here, top of the range, bottom of the range. This is the daily chart. You can see those wicks and tails getting eaten on both sides. And you can see that even this morning, we're painting a bit of a low here and this wick up here. I really think that on balance, this market is now coiling just like the US dollar. So my hunch is we're probably more range. And then to finish off the presentation today, here is that Litecoin chart. As I had shown on the broiler chicken show, it looks to me like what we did was following the face rip rally up. We just simply did nothing more than just come back and tag the 50% level. So if this is going to GAN out the way GAN usually likes to see it, we probably should expect a 50% tag going the other direction now. And that's basically what happened in the last cycle. Watch the broiler chicken show. Basically, I talked about how the pump before the halvening event, then the market rallies into the halvening event, and then we find out whether this thing's actually for real. And my hunch, unfortunately, is that will be sort of our cycle top because there won't be any new fundamental drivers for this thing. Okay, so there's your daily brief summary. Hope you enjoyed it. Have yourselves a great rest of your day. Everybody should remember what their number one job is to do. I'll leave you to figure that out if you don't know what the answer is, but almost everybody on TRI does. All the best, everybody. Have yourselves a great day, and bye for now.